the button. Don't leave here. I congratulate you today as you've entered a place where you could learn everything you've been searching for in your trading journey so far. Hi guys, you're welcome back to another episode of YouTube section. Today I will be revealing to you the most profitable strategy in the history of forex trading. But before you can pull these stunts, you have to know some certain things, so you can check my channel to know about some things. So today I'll be doing some top-down analysis on this chart right now, but I realize that I have to share it with you guys. So right now I will just be using the market structure, but there are some basic knowledge you have to know before you can do this thing. So that's why I would recommend to just go through my page to learn some things. So right now, as on my screen, you are seeing this chart right now, and I'm on the weekly time frame. We check closely. So I'll be doing a top-down analysis from the weekly time frame down to the lower time frame, and it's so easy, guys. You just have to follow some certain rules. So let's dive into the section. So guys, you see right here we are on this weekly time frame, and on the weekly time frame, for a candle to open and close, it takes 1 week for only one candle to open and close. But how do we do that? We cannot wait for a week before you can catch a trade on any time frame. So that's why we have to do some top-down analysis so that we can catch our trade easily and profitably. So right here on my screen, I have to focus on the recent swing structure on the weekly time frame. I told you guys, before you can do this thing, you have to know some certain things like the market structure, the liquidity, and some other basic stuff. But don't worry guys, after this video I will do some video about that, but just focus on this first. So right here on my screen, if you look closely, we have a structure right here. You see, this is an high and this is a low. Initially that's a swing structure for a sell setup, but you see what the market did next? Market just broke the structure to the upside, which let us confirm that there is a swing structure right there. And for our swing structure to be valid, we need to have some 3 things. I'm coming. And what are those 3 things? And that's the sweep of liquidity, the low that the market takes out, we mark it out. This is it. I'm coming. Let me map it out for you. And also after that, we'll start with break of structure. This is the break of structure. That's it. So after that break of structure, there are also things that you must know. Since our structure is completed, what is the next thing? The next thing is we just have to map out our POI, which is our point of interest. Now, where is our point of interest right here? Here we have 2 kinds of point of interest. The first one is the QM, which I will be revealing in my next video, or the other block. But I'm gonna be using the other block today so that our video will not be too long. I want you guys to learn some things. So right here, and the other block right here is so simple. Before this impulsive movement to the upside, what is the last red candle? The last red candle before the impulsive movement is the other block here, and for the bearish trend, the last green candle for the impulsive movement to the downside That's our other block. So, and if you look closely right here, this is our last red candle before the impulsive movements. So we map it out. You see that the market has tapped into our origin, into our PY rather. But if you say we should be taking a trade here on the weekly time frame, the time will go like waiting for years before we can catch our trade. Look, we've not even got 1:1. So if we are saying we want to catch a trade right here, you know, we'll be waiting weeks before you can get a target here. So what are the next things you need to consider? After you know all this, the next thing is to find your premium and discount zone. And how do you find your premium and discount zone? You know, it's not writing here there in the market that there is the premium and the discount zone. The next thing is for you to just take out your Fib tools like Fibonacci tools. This is my Fibonacci tool right here, and place it from the swing low, your swing low, and to the swing high, the area where my market decided to retrace. This is it. You see? So the reason for us using this Fibonacci tool is for us to determine the premium and discount zone, like the buyer's side and the seller's side, the buyer's area and the seller's area. So you see from that red line, which is that middle line 0.5 to the downside, that's the buyer's area, that's the discount zone. But anything from that 0.5 to that 0 is a premium zone, is a seller's area. So just take note of that. So since you know this, you know, here like this, let me take this out. Let me take that Fibonacci tools out. You know, initially on the weekly time frame, we look for a structure like a value structure, like our sweep of liquidity, break of structure, and also our PY. Like on we will talk more about structural liquidity on our video, don't worry. But you see, the area whereby market decided to break, like that break of structure, is our transactional liquidity. And what's the work of a transactional liquidity? It lets us anticipate. It works for a reversal. Like anytime we have a break of structure, we must be anticipating for a possible reversal. And if you look closely right after we have this break of structure right here, what does the market do? The market retraces back. So that's the work of this transactional liquidity. And if for a structure to be called a transactional liquidity, we must have a valid break of structure, which is what we have here. Just take note of that. So we'll talk about the other type of liquidity when we move on to our video. So you see, we've had this swing structure, we have this structure right there. What's our next step? You know, market has tapped into our POI. We can't just be waiting for weeks for market to like go into our target. We'll just be waiting for months before we can get even one TP, like one profitable trade. What is the next thing? You know, we're on the weekly time frame right now. Don't forget, if you look closely right there on the weekly time frame. So the next thing for us to do is to just go to the lower time frame that is next to the weekly time frame and look for the same thing. But don't forget that we've determined our premium and discount zone, which means we have to focus on this recent structure, like this move. I'm coming, let me show you guys. You have to focus on this tiny move right there. You have to look what is inside. So you have to focus on this move and find something like this sweep of liquidity, break of structure, and also POI and structural liquidity. But we will talk about structural liquidity and we move on. So all we just have to do is, since we know our premium and discount zone, you know, the market is in the discount zone right now, which means you can buy. So all we just have to do is to just buy we are buying. Just take note of that. So the next thing that you just go to the daily time frame. You understand me? So what we are doing right now is we just be focusing on this move right now. This move, that's what we are focusing on. So this is a discount. This is a discount zone for the buyers now, and we are buying to the target of that. Let me show you guys. This is what is going to happen. You see, this is the target of the market right now. This side, that's the target of the market for the weekly time frame. But we can't just wait for 1 week to be buying to this side. So what you just have to do is to just look for another structure before we can buy here. And we are in a discount zone. You have to look for same structure like this in a daily time frame, which is this tiny move you're seeing right there. You have to look inside that to know the next thing. So just go to the daily time frame. Don't forget we are in a discount zone. So right here, what did we see on the daily time frame? We have to look for the same structure, and right here on my screen, you see we have this sweep of liquidity here. Like the market take out this low right here. Let me label this for you guys. So the market take out this low right here. That's our sweep of liquidity, and after that we have this valid break of structure, which is our transactional liquidity, guys. Don't forget. And what's the work of a transactional liquidity? So hey, it works for a possible, like it's let us anticipate for a possible reversal. We are not focusing on the daily time frame chart again. We are just trying to know what's wrong with this move, to know the next thing. So this is our break of the market, and this is our break of structure now. So what we did on the daily time frame, we have what we did on the daily time frame, we have to repeat it here. I'm coming, guys. Our break of structure. This is our break of structure, and that break of structure is the transactional liquidity, guys. Don't forget. So what we did on the weekly time frame, we have to repeat it here. And what am I talking about? Since we have seen our sweep of liquidity and the break of structure, which is our transactional liquidity, we have to just take our flip tool once again to know the buyer's area and the seller's area. This POI from the high time frame will go because it has been mitigated, it's not working again. So this is all our focus now. Hope you guys understand me now. So the next thing for us to just find our discount zone and premium zone. Because the reason why we are repeating that is that we can't just say, since we know that we're in a buyer's area, we are going to buy to the zone, to the higher time frame zone. And I told you that after a break of structure, we will always have a break of structure in transactional liquidity, which let us anticipate for a possible reversal. And right there we are seeing this reversal right there. So also right here also we have to repeat that same thing. So you just have to do to just take your flip tools. This is it, from the swing low to the swing high area whereby market decided to break. Don't forget. You see? So you see that reversal right there, that's the seller's area. You don't have to buy. If you buy there, you're on your own, you are gone. Your money is gone, you are the liquidity. So, and anything from that 0.5, the middle line to the downside is the buyer's area, that's the discount zone. That middle line 0.5, that middle line is the equilibrium. I think you guys study physics in school. Yeah, equilibrium, whereby you don't have to do anything. Just, you know, make that reference, take that reference also, use it to trade also. So in that zero point, you don't have to do anything. You just have to wait. Anytime you see something like that. And so since you know your premium and discount zone like this, what is the next thing? The next thing for you is to just map out your what? Your POI. So here we'll be using the order block. So this is it. Last red candle before the impulsive movement. Hope you understand me, guys. I think it's clear now. But here also we know that we have to sell before we can buy. So what are we going to be doing now is that we have to sell to this one daily time frame order block. So what we just have to do is to just go into the 4-hour time frame and also find same thing like this. But mind you have to be looking for what? You have to be looking for a sell. So you just have to go into the 4-hour time frame since it's the next bigger time frame order for this setup. Hope you guys see what I did here. You know, we are in the seller's side. Like we're in the seller's side right now. You know, we're in the premium zone. So what is the next thing we have to do? Also, in the 4-hour time frame, since we are in the seller's area, we have to be looking for what? Same thing like this on the 4 hours. So I'll just have to focus on right there. You know, normally after a break of structure, I told you guys the break of structure is our transitional liquidity, and we must have a possible reversal. Right there, you see what you're having right there is what? A reversal. So all you just have to do right is just focus on this move from this high to this low. Since you know that we are in the seller's area, you have to be looking for a sell entry only. So what are you going to do right here is that you have to look for the same thing, and right there on my screen, market take out this high right here. As our sweep of liquidity, you put this dollar sign there. So liquidity is money, don't forget that. So, and also after that, I see this break of structure. You see, you know, we are looking for a sell. I also see this break of structure. Oh shit, sorry guys. Has the BOS. You see? So sweep of liquidity, break of structure. Here we didn't have a structure liquidity, but where is our POI? You know, I told you guys that our POI is either the QM or the other block. But right there you see this last green candle before the impulsive movement to the downside. The candle is too big now. We have to use the QM. And where is the QM? Let me show you the QM pattern. It's just something like this, whereby, you know, other block fail and you see high low, higher high, and the market decide to break the entire swing to the downside. So anytime market comes to this area, market will retrace back. So that's our QM. Don't forget that. And here like this, I see something like this. You see here, and market decide to break this swing. So anytime markets come back to this place, they are selling. But right here, I'm not going to the QM, so I'll just mark out the QM. It's so tiny, guys. It's a wick right here. You see that tiny wick? That's our QM. You map it out. That's it. So also here, guys, you have to be repeating same thing. You know, we have our POI, everything is, you also have to look for a buyer's area and the seller's area. You know, we have a break of structure right here. Before we can also say we are going to be selling, you must buy to this place. Also for people that love taking some structure trend like the reversal trend. So if you need a more video about that, I'm gonna do video about that. The market structure, I will tell you that the depth, in depth about the market structure, to tell you the full details. So the market structure is just consists of three steps. Though I'm not gonna go into that today, sha. But this retracement is the substructure for the market structure, for the advanced market structure right here. So assuming we want to buy after the break of structure to this entry right here, you have to look for the same thing. And how we're gonna do that? You know the drill. Take your fib tool from this swing high to the swing low. You see? You know that assuming the market hasn't tapped into my entry right there, I'm just doing this video as the market hasn't tapped into my origin POI right there. So this is what I'll be doing. But since the market has gone, no problem. So anytime you see something like this, and if we're in the 4-hour time frame, don't forget that we are repeating the same thing over and over. That doesn't say that the entry in the weekly time frame is affected. No, it's not affected. We are just trying to limit, like to know where our entry will lies into. That's what we are trying to do. So right here like this, we know the buyer's area and seller's area right here. We place our fib tool from the swing high to the swing low to know what buyer's area and seller's area. This downside from this 0.5 to 0 is our buyer's area, which is the discount zone, and from this 0.5 to the upside, that's our seller's area, which is the premium zone. So anytime you see it sit up in this kind of premium zone, we don't take that sell. So the next step is that you can't just take trade. For me, I don't take trade from these 4 hours. Like I don't take trade in these 4 hours. I will not just be waiting for my candle to tap into 4 hours entry before I could take trade. So the next thing is I will just go into the lower time frame also, which is my 1 hour. There's no, you don't need to bother about the 2 hours. So just go to the 1 hour straight. We've determined our buyer's area and seller's area. So all you just have to be looking for in this buyer's area and this lower time frame is also sweep of liquidity and also a break of structure. But here in the lower time frame, you also need to look for a structural liquidity. I will tell you about that. Don't worry. Right here on the 1 hour time frame, I don't think I see anything here. But let's just focus on this our entry right here. So assuming you want to buy right here now, and we're in the buyer's area like this. My entry time frame is the 15-minute time frame. So what I just have to do right here is to just go into the 15-minute time frame to look for the same thing. This is the 15-minute time frame, and I've known the buyer's area. Let me take it out. Since I've known the buyer's area and the seller's area, we're in the buyer's side. What am I going to be looking for, guys? Hope you don't forget. This is it. If you look closely right here, we have this sweep of liquidity, this tiny market takeouts that previous low. You see, that's the sweep of liquidity. After that, market broke the structure. But one thing, guys, as we have a sweep of liquidity and market break a structure, right? The market taps into that structure, which means that swing is not valid again. You just have to move away from there. So what I just have to do is to just clear that one. You see, and also if we look closely, we also have another sweep of liquidity here. This is obvious. It's so clear. Market take out the low. Let me map it out. You see, guys. So next, after that one, the origin. This is a break of structure. But in the lower time frame, there's something we call our structural liquidity. Last low before the main low. That's our structural liquidity. I will tell you how we can get our structural liquidity, guys. Don't worry. So if you look closely to this one, we also have this break of structure close to that entry. Guys, I want to let you know one thing right here. We also have this break of structure close to that entry. So how do we know our structural liquidity? You know, for a structure for a string structure to be valid, it must have some certain things. Let me tell you guys, in this lower time frame, you know, I told you that I want to tell you something when we get to the lower time frame. This is what I'm trying to tell you. After a sweep of liquidity and we have a valid break of structure, which is our transactional liquidity. You know, after that transactional liquidity, we need to have a structural liquidity for us not to get induced, like for markets not to take us out. That's our structural liquidity, the last low before the main low. That's our structural liquidity. And the work of structural liquidity, it works for expansion. Anytime the market taps in there, market retrace back, so the market retrace the trend. That's the work of our structural liquidity. You know, I've tell you 3 things now, guys, about liquidity. Even though I haven't done a video about that, I'll tell you about transactional liquidity, which works which let us anticipate for a reversal. And also I told you about structural liquidity, which work for a continuation. So the third one, guys, I'm gonna tell you before the end of this video, so just stay tuned. So how do we know about our structural liquidity? And one thing, guys, assuming right here I see only this, I'm coming, assuming right here I only see this swing structure without any structural liquidity, assuming I only see something like this, you know, I won't try to take this trade. I have to wait for a structural liquidity. But for this market structure video, I'm gonna do a video for market structure for us to know more about that. So how do we know about our structural liquidity? It's so simple, guys. You know, for us to know about the buyers and sellers, we have to place a candle from the swing low to the swing high. But for you to know about structural liquidity, you have to place your flip tools from the swing low to the transactional liquidity area, to the break of structure, guys, you know, to the break of structure. So anything above the 50%, which is the 0.5, is a liquidity, even though you can't take your entry right there. Anything above the 0.5 is a liquidity. But the last and your structural liquidity must fall under that 50%, and it must be somewhere around this place. It must not be here. It must not be something like this. Let me show you. It must not be, the structural liquidity must not be something around this place. I'm coming, you know, it must not be on this candle like this, and you don't call this one invalid structural liquidity. So take note of that, guys. Your structural liquidity must be inside this 50%, and it must be on this 50% of these Fibonacci tools. Hope you guys take note of that. So it must be on this 50% or close to it, like this one. If you look closely, this is our structure. We have seen our structural liquidity now. You know, the low is so close to the 50%. That one is valid. So since we know our structural liquidity, we just have to map it out and look for our POI. So simple, guys. So and you know, our POI is just the last red candle before. Let me take this one out. Our POI is the last red candle before the impulsive movement to the upside. You know, for you to know more about this, you have to know about the market structure, like the advanced market structure in depth. Don't worry, I will do a video about that. So you know, this last red candle is our order block. That's our entry. You see, that's our entry. You know, we are talking about the 1 hour time frame structure now. Don't forget to, we are trying to buy. to the POI of the higher time frame. That's what I'm trying to do now. For those of you that don't want to wait, like want to catch a substructure trend, like the reversal trend. So try to understand. I didn't forget what I'm doing. No. So since we are trying to do this in a bias area, which is the discount zone of the 1 hour time frame. So take note of that. So, and if you look closely right there, you know in this 15-minute time frame right there, we talk about multiple things. You have to look for a sweep of liquidity, break of structure, and after that you see your transitional liquidity. You also have to look for your structural liquidity, which makes your structure valid. And we've seen our structural liquidity here, which is this last low before the main low. So just map your entry, and if you look closely, the market taps in it, and if you are the type that look for your entry, you have to take your 1:3. You see right there, like me now, I took only 1:3. Your stop loss must be below this low, main low right here. See, and target your 1:3. I'm sorry guys. So your stop loss must be below this low. Let me show you. This main low of that structure, your stop loss must be below that, a little bit below, not that much, and you target your 1:3. You see, and boom, market taps into there. So you see, market taps into there. This is it, guys. So we are trying to buy to the 1 hour origin. So if you look closely, now we are on the 1 hour time frame. We're on the 1 hour origins. Like we are trying to sell right now. If you try to buy here, you're on your own. And also you can even try to hold your buy to this point of interest right there. So it's your own choice. You can do anything you want. You just try to know the structure, and you have to know the story behind everything you are doing. You have to build your story. So don't forget that, guys. So right here on this 1 hour time, we are trying to say what we just have to do also is to just look for the same thing we are trying to do. A sweep of liquidity to upside market will take, assuming now something like this. Assuming this is the main high. You have to see something like this. Sweep of the previous high, and we break of structure. But before that break of structure, you have to see some structural liquidity. Don't forget that guys. So and that we see our break of structure. That this low before this last high before the main high is our structural liquidity. And anytime the market taps into our POI, so we can now take our sell. You sell to whatever you want to sell, but our sell entry must be from this retracement, this swing low. That's where you can sell to. So I think I'm clear about this. So right here, as the market is coming down, all I'll just be looking for right there is just a sweep of liquidity, break of structural liquidity, and everything. That's all it takes, guys. This what I'm trying to explain to you is not that hard. You just have to follow the trend, like know the story behind everything you are trying to do. That's all it takes to profitable in this market. So for more video like this, don't forget to hit the like and subscription button, and I'll be very, very grateful if you can just follow me, because that will let me know that what I'm trying to share you guys are watching. So don't forget to hit the like and subscription button for more video content and amazing video like this. Stay tuned, guys. You're welcome.